So today we're going to be looking at the Apex Flow Expert Advisor. This bot looks like a classic US30 breakout system, but curious as to if it's doing anything different than just your standard pending order trailing stop loss bot. So let's dive in, do a deep dive, and see if we can discern the strategy and how this developer made a bot which has been having a very impressive live signal to date. So from this little description here, we can see that it is indeed running on the US30 index. I wouldn't be surprised if this is a classic breakout bot, and that tends to work really well on the US30 just because the US30 is such an incredibly volatile pair. It moves, and when it moves, it can really move quickly. And for this type of system, which is aiming to usually scalp breakout, it works super well because it has very clean price action. Whereas if you try to trade something like, let's say, the Aussie dollar, New Zealand dollar, which is more of a range-bound asset, if you were to try and trade breakouts with it, that doesn't work nearly as well because when it hits the top of a range, it's statistically more probable to revert back. Whereas the US30, if it hits the top of a range, rather frequently, even if it does revert, it does poke a little bit above the range. So you have enough movement to scalp quick profit, and that's why it tends to work super well here. And going through a few other points here, we'll check out the signal in a bit, but we can see that it can use any time frame, and it has a customized stop loss, take profit, and trailing stop loss that you're able to adjust the risk control. So most of these systems use trailing stop losses. I personally am a big fan of both break even and trailing stop losses. I find that your risk reward can be quite good there, particularly if you kind of let your profits run. So like you go to break even fairly quickly, or you go to 1R in profit pretty quickly, and then you let your profits run. Or in this type of system, a trailing stop loss quite often does lead to a higher risk reward ratio than with a static take profit. And the reason why this is the case is, like, let's say you have a huge breakout on the US30. If you use the static take profit, it would immediately just hit your take profit, but not continue any further. But if you use this trailing stop loss approach, quite often you'll have times where we'll just continue a little bit further, and that compensates the fact when it would have just hit the trailing stop loss and pulled back. And this, on average, tends to lead to a higher risk reward. And that's why this is quite a good approach to take if you're trading this style of system. And once again, he's saying that you can use a hedging account with a high liquidity platform. So yes, you need to have low spreads for this to work. The biggest downside with this type of bot is if you're trading, let's say, a prop firm that gives you low leverage and not amazing trading conditions, your performance won't be nearly as good than if you traded on IC markets or PU Prime, just because it's very spread sensitive and it's very leverage sensitive typically. So you need to have fairly high leverage for this to work. And that's why I have personally moved away from this style of system. I still have a few bots which do pretty much exactly the same thing, but it doesn't work nearly as well for prop firms. So just something to keep in mind if you're looking for a prop bot versus a personal capital bot, you do have to consider a few different things. And yeah, so far we can click over to the live signal here. We can see that it is a very impressive live signal, and he has been running it for several months. And we can see that during kind of some more choppy, like geopolitical months, so like April when Mr. Trump was putting in place a bunch of crazy tariffs and the markets were just like tanking, this led to a tremendous amount of like volatility, particularly around market open, and I wouldn't be surprised if that's what caused this instability. November was also the election month, so a lot of the volatility that was happening then too likely contributed to some modest drawdowns in those periods. We're seeing here in December the returns were absolutely crazy at 45%, and many of the months to date the returns have been very good. If we look at the trading history, I'm curious in December if he was massively scaling lot size. That could be an indication of why the performance was so good. So yeah, if we see here in kind of December, late November, he doubled the lot size. So that's something to keep in mind. Yeah, so he started off with 0.2 actually, and was doing quite well. When it was doing well here, and then he kind of dropped the lot size once he hit a certain degree of performance. Okay, so that's not anything too crazy. Like essentially, he had very good returns as of December, and then to kind of take risk off the table, he then reduced his lot size. So that could just kind of explain the 45 here. So the drawdown and the return over drawdown ratio would have been a little bit different based on the fact that he was using double the leverage previously. but nothing overly fishy is being seen here. Like, it is a real signal, it's a good broker. So overall, quite good, but just keep in mind that the returns are slightly inflated, but nothing too crazy. If we look at the statistics here, this is matching exactly what you would look to see for this type of system. You have a very inverted risk reward of your average profit is around $1.4 and your average loss around $6.4. So that's a pretty significantly inverted risk reward. And then also here we can see the win rate is going to be 88.46%, and you're only losing around 11.54%. So the exact risk reward, I think it's going to be around a 1 to 5, but let me just pull out the calculator here. Yeah, so it's 0.21%. So that would be 6.41 divided by 1.41. Yeah, so we're going to have a 4.5. So around a 4.5 inverted risk rewards. That means that one thing to keep in mind is if you have one loser, you're going to need around 4.5 winners to actually make up for it. And nothing wrong with that. I have also developed bots like this, but you also, like, it's based on personal preference, right? If you like to have an incredibly high win rate, then this might be the bot for you, but you have to know that if you have a loser, it's going to take you a while to recover from that. I much prefer to have around a 50% win rate, ideally better than that, but with a 2 to 3 risk reward, 2R, 3R to 1R of risk, because then you only need to win 30% of the time to actually make money. And that approach tends to work a lot better for prop firms. But some people love this type of system. I started with this type of system. It works well. So nothing inherently wrong about this. It's just something to keep in mind. So now we can jump over to MT5, where I've ran a quick backtest here. And this is exactly the type of backtest you would expect to see. It's a staircase backtest. You have these long runs of winners and then drops. And this is very characteristic of the inverted risk reward systems. So you have long runs of winners and then loser. And we can see that once again during these kind of periods of November and April, it's when we saw that choppiness. This is simply because of the market regime, whereas during more like cleaner periods of price action, we are seeing these long periods of winners. And in terms of the actual strategy, it is very much trading a breakout system. My one question was whether or not it was a time-based breakout system or more of just a level-based breakout system. We're seeing quite a few of the ins happening around market open. So 60 and 30 is around 9:30 Eastern Standard Time. So it could be that it's trading an opening range breakout, or it could just be placing pending orders at key levels. And as there is heightened volatility at the open, that's when it's being triggered. But to ascertain that, we can run ourselves a visual backtest here. Oh, wow, okay. So not seeing any pending orders so far. Just, there we go. Okay, I'll fast forward a bit. So yes, he's placing pending orders and scalping the breakouts of those orders. He doesn't appear to be placing it at an exact minima and or maxima. It seems to be more of a zone. We can see when exactly he's placing it. Order performed. Sell stop, 1627. So I think there is an element of opening range breakouts here. And you place those two. I'm just looking at the times here to make sure. Buy stop, sell stop. So yes, the majority, this looks to be an opening range breakout system. So very similar to the Wall Street Killer, similar approach. Right before the market opens, you place pending orders and you wait for the volatility of the open to break it. Maybe he's placing a few others a bit later in the day, but just by going through some of the logs here, it looks like they're indeed being placed a few minutes before the market open. So this system works. I have developed a US Lightning bot, which does something very similar. It's a good system. It works. It's a profitable bot. The one thing to note is you typically have an incredibly inverted risk reward, and it needs a pretty hefty amount of leverage to work, which makes it a bit more challenging for prop firms. So if you like the Wall Street Killer, this bot is pretty similar. If you like my US Lightning bot, this one is also pretty similar. So it's a good bot. I think there's definitely a statistical edge here. No blatant signs of manipulation or anything fishy going on. Just like I've run this bot personally, or like something similar to this personally, and the inverted risk reward and the fact that you can have some pretty nasty periods of drawdown if you enter a volatile market regime, is something to note, because let's say in this April and November, you had some rather choppy periods. So it's important that you don't use excessive leverage. So if you have, for instance, a big winning period, sometimes people will think that they've discovered the Holy Grail and they'll put in a significant amount of leverage. That can cause massive drawdowns. But provided you trade this thing safely, you recognize what it is, what it's doing, it could be a good bot for your portfolio. So guys, hope you enjoyed the video. I'll see you in the next one.